I don't know 100%. Either way, if you're watching us, it's Military Mortgage Boot Camp.
We're here boot camp style.
Boot camp style. Jay Fish from Novi, Michigan, or as TJ Barker would say,
Novi, Michigan.
Novi or Navi? It's not Novi. It's Novi.
Number 6 train station.
Number 6. So what are we doing here today, Jay?
We're putting veterans first.
So if you see that backwards on your screen, we apologize. We're putting veterans first.
Kind of a better look up there like that.
Yeah, it's probably backwards on the screen. Who knows?
That's all right.
But we were going to do Christmas colors, red and green, but I only had a small red shirt. You guys didn't want to see that.
Yeah, he'd have been like a ballerina stuffed in there.
That was bad. So today, what we really want to do is what, Jay?
We want to empower you guys to go out there and put veterans first. And to do that, the best way to do that, I believe, is to go out to the real estate community, because let's face facts, you guys are all trying to get realtors, and we want to help you get realtors. And one of the best ways to get them is to educate and teach them about something they don't know, but something that they truly want to do. Everybody wants to help veterans out there right now. It is one of the hottest things to do in any industry. Veteran is a very hot buzzword. And, helping veterans, not only here's a whole new demographic of people, a whole new clientele that people don't actually go after on a regular basis actively. But you're going to feel good and awesome about yourself, truly helping someone achieve their home buying dream. I know every realtor says, oh, I want to help someone achieve their home buying dream. Okay. But when you go ahead and you put a veteran in their house who's come home from overseas deployed, done a few tours, they're happy to be alive and actually be around their family, and they hug you and say, thanks, brother. I never thought I was going to get a house, and my family appreciates you. And they cry, it brings you to tears. I don't care who you are, how big you are, how bad you are. You're going to cry like a baby.
Yeah, I don't want to see this guy cry like a baby. Trust me. I've seen it once or twice. So Jay, you're going to actually help the loan officers bust myths.
I am.
You're going to go through what I think has been one of our more popular military mortgage boot camp presentations. And really, this is about understanding how we need to communicate with the real estate community. This is the only thing we want to do when we're talking to realtors. Of course, we want to understand the realtor's perspective. We want to understand their challenges, how they, it's hard for them sometimes to market. Most realtors are good once they have a client, but it's not as easy for them to find clients. So we never want to talk down to the realtors. We never want to come from a position you guys don't care about the veterans, because trust me, they do care. They're just not always educated as to how to communicate with each other when it comes to the VA loans. So
each other meaning buyer's agent and seller agent trying to get the offer accepted.
Absolutely. Yep. So Jay's going to show some of the facts that we want to make sure we communicate every time we're talking with real estate agents. And one of the best tips that I can give you guys before I shut my mouth, which sometimes hard to get me to do, is when you're out there on the streets and you've got a veteran that's ready to buy a house, make sure you work with your buyer's agents to reach out to the listing agent.
Absolutely.
Don't be this secret LO that nobody can get a hold of that's just saying, well, didn't you read my letter? It said he was a good buyer. It said he was, he's well qualified. Actually, pay attention to what we're teaching you here today. Reach out to the listing agent and help share the facts about the veteran buyer and about the VA home loan. Obviously, don't share anything the veteran is not comfortable or is giving you authority to share, but make sure that that agent knows that you've been educated by Military Mortgage Boot Camp, that you understand most veteran buyers are actually much more qualified than some of our conventional buyers, certainly our FHA buyers, and that the VA home is one of the home loans, one of the best home loans in America. So with that, go ahead, Jay. Let's try to do a screen.
Well, first of all, before we get into that, I want to make sure that you guys, it's important what Fish said. Don't sit there like a bump on a log. Go out there, be active. You have to make sure your buyer's agent is involved, because the buyer agent is key to getting an offer accepted. Look, whether you like it or not, most listing agents have a stereotype, or they're going to have some sort of issue or past history or something with accepting a VA offer. And if you're in a market like we are here in Detroit, where there's not a whole lot of inventory, and what's happening is that you have multiple offers on every single listing. And so you're a lot of times going to be in a scenario where your VA offer is up against two conventional 20% down offers. And if you don't get to that listing agent and share like why you should choose the VA offer over the conventional, they're just knee-jerk reaction going to kick VA out of the mix like that. So here's what we're going to do today. We're going to empower you with some bullets in your belt so you can overcome some of the myths that surround the VA home loan, and we're going to myth bust right now.
Cool. All right, let's see if I can share the screen here. And we're going to pull this guy up. We're going to move him over here. Hopefully this works for us. All right, slideshow from the beginning. All right, Jay's driving.
All right. So obviously we are Military Mortgage Boot Camp. That is Mike Fisher and I, a couple of gnarly looking dudes right there, veteran advocates. So let's get into these myths right away. There's 6 of the most top myths that continuously come up over and over and over again when you talk to loan officers, real estate agents, especially on the listing side. Number 1, 0 down equals weak buyer. Number 2, VA loans are harder to get through underwriting. Number 3, VA loans take longer to close. Number 4, the seller has to pay for my veterans fees. We hear that one a lot. Number 5, you can only have one VA home loan at a time. That's not necessarily on the seller side, but you hear that from the buyer's agent or the veteran themselves, or even the loan officer. A lot of people don't know that you can have multiple VA home loans. That is an absolute myth. And number 6, the biggest one, VA appraisals are tougher to get done. So let's dive right into number 1, 0 down equals weak buyer. So, and when we're on, there's my screen right there. When you look at the VA buyer of 2017, first of all, these numbers come directly from the Department of Veteran Affairs and the statistics that we get at the annual lending conference. Now, for fiscal year 2017, if you guys don't know, the government's fiscal year is October to October. So these are fresh within the past 60 days. The median FICO score is 741. Median liquid assets, 17,032. Median household income for veterans, 73,769. And what is it for average Americans? Fish, 51,000, right? So they on average make about $22,000 more a year. And we're going to touch on that just in a second. The average loan amount nationwide in 2017 was $259,687. And contrary to popular belief, 29% of veterans actually made a down payment. See, just because you're entitled to go 0 down as a veteran doesn't mean you have to. They make more money. They put more money down all the time. And if you look at this profile right here, this borrower could go conventional any day of the week. But why would you put more money down just to have a higher interest rate and a higher payment? VA rates are lower every single day by 1/4 to 3/8 in most cases. So this, let's take another look at the buyer of 2017. Most people don't realize when you sit here and you look at this photo and you talk about veteran, you see what's on the right. You see camouflage. I mean, why wouldn't you think that? That's what you see on TV every single day. People don't realize we've been at war since August 2nd of 1990. That's 27 years. That's probably older than some of the people that are on this call. You know, most millennials that are on the call, you've seen nothing but this your whole entire life. And you got Fish and I running around the country in camis teaching people. That's what people think of when they hear veteran. But I want you to really retrain your brain, as a matter of fact, and look at the left side, the suit and tie, because as a matter of fact, 83% of veterans don't even use their VA home loan benefit till after they're off of active duty, back in civilian status. Now, 28% of veterans who are over 25 actually have a bachelor's degree in the year 2017, as opposed to 29% of the rest of the population. Why is that an important fact? Well, there is, I would have to say, a pretty fair statement. You know, don't you think it's common knowledge on the street when you go to submit an offer to a seller, if someone has a college degree, they think that they probably have better credit, they make more money, they're a more strong, solid borrower, right? Well, proof is in the pudding right here. Veterans go to college. Now, I can tell you that during the Vietnam era, there's no way these statistics were this high. The percentage was way lower. It used to be if you didn't go to college, you went to the military. And maybe that's a little bit true now today, but here's the difference. Now you go to the military, you come home, you have what's called the new GI Bill or the housing allowance. So they actually have money exiting the military coming right in to put them right back into school. And if you look at this figure again, where the median household income is $73,769 versus civilians, I'm sorry, it was a little higher, Fish, it was $59,039. So they still are making just a little bit less than $20,000 more. But the difference is here, when you look at the civilian versus this veteran on the left with a suit and tie, the reason I believe that that income is so much higher is because the veteran homeowner, once they come back to civilian life, this person rises to management faster. They are self-motivated, disciplined. They don't have entitlement issues. They're happy to be alive and just back to, you know, raising their families and getting along in their life, and they're hard workers. Now, there's about 1.14 24/7 veterans with a service-connected disability. Why is that important? Because when you have the VA funding fee, that will waive the funding fee and put those dollars back in the veteran's pocket. And we'll talk a little bit about that in just a few minutes here. So next slide. This myth is absolutely busted. So zero down does not equal weak buyer when it comes to VA. Totally busted. Number two, VA loans are harder to get through underwriting. Well, let's take a look at this. This comes right from the VA 26-7. Underwriters are encouraged to consider every possible appropriate factor in seeking a proper basis for approving loan apps for every qualified veteran. Now, guys, you got to understand that there's two components to a VA home loan. Write this down. Number one, eligibility. Number two, qualification. So number one, you're eligible for a VA home loan based on your time in service. But although you may be eligible for this loan, you still have to qualify with your credit and income. Now, Bill White, who has been at the VA since 1944 when it originally started, now he's since retired, but as of about 5 years ago, any VA underwriter in the country, I assure you, has talked to this man. He basically wrote the book on this stuff. And he states, as long as lenders document their reasoning, it is extremely unlikely VA staff will ever take issue with their decision. The VA is empowering lenders. They want them to make a decision. Again, they've created a nice little box. If the loan fits in the box, make the loan. The problem is lenders have something called overlays. So let's look at it from a lender standpoint. Why would a lender want to do a VA loan versus a conventional or FHA? Well, first of all, you have portfolio performance versus the default ratio. In the past 12 years, VA has had the lowest default ratio nationwide. Less than 2% of veterans ever go to foreclosure. So if I'm a lender, I got a 98% chance that this person is going to make the loan if I give them a VA home loan. But what happens if they don't? We look at the second box over here, lender protection against borrower default. If they don't make their payment and I'm a lender, what happens? Well, Fannie Mae and Freddie Mac, which happens to be the investors for all conventional home loans, guess how much money they pay a lender? Nothing. Donut hole. You want to know why? You weren't supposed to foreclose. So when you foreclose on a conventional home loan, you don't get anything if you're a Wells Fargo, a Chase, or whoever from Fannie Mae or Freddie Mac. That is why overlays have been created. We're going to talk about that in the next slide. Now, Ginnie Mae is the investor that governs FHA and VA. And what you got to understand, guys, is that FHA and VA, they're not investors, they're not lenders. You have to remember that. They're insurance agencies. They're no different than State Farm or Allstate. So FHA, if an FHA loan defaults, then what's happening is the lender is going to submit an insurance claim to FHA. It's going to go to a claims adjuster. The claims adjuster is either going to approve or deny it and send it back. In most cases, unfortunately, it gets denied. VA is the only one that guarantees the lender, in the event of borrower default, that they will cut two checks. One, they will clear the loan, and number two, they're going to give them 25% of the guarantee, which means the total loan balance. So you're telling me if I'm a lender, number one, I got a 98% chance that this veteran is going to make their payment. But if they don't, you're going to guarantee me a payout for my insurance premium? That's a pretty safe investment for me as a lender. And number three is public image. Okay, let me make this statement. I'm sure you all agree. Banks don't make a move unless there's something in it for them, right? Well, if you recall a few years back, and when things were getting hot and heavy over in Iraq and Afghanistan, and the term rubber stamping came out, we had a nationwide meltdown of foreclosures between 2006 and 2011. Millions and millions of loans across the country defaulted. Well, a bunch of lenders foreclosed on active duty military in Iraq and Afghanistan. Not only is that a scumbag thing to do, it violates the Sailors and Soldiers Act and the SICRA Act. See, when you're all fighting for this country in war, your credit is supposed to be frozen in time. Pause button. They can't mark you on time, can't mark you late. Okay. But there were so many people foreclosing at the same time, and lenders didn't have enough staff to really review all the files. They were just hitting foreclose. Literally, that's where the term rubber stamping came from. They didn't realize, oh my gosh, this is a VA home loan. We're supposed to stop and put it over here, protected by the Sailors and Soldiers Act and the SICRA Act. Well, in the meantime, what happened is these lenders got smeared in the media. Guess what happens if you're a JP Morgan Chase or a Wells Fargo and you get crushed in the media? Where does your stock go? Right to the bottom. And I can tell you, if you're a publicly traded company, you do not want to look bad in the public eye very long. So this is why Wells Fargo started giving away homes for heroes for all their REO properties. Chase hiring 100,000 veterans. Bank of America, we're giving away a gift of equity on our REOs when you purchase, you're a veteran or family member of a veteran. These are all their ways of paying back for the Sailors and Soldier Act violations. So to recap this slide right here, number one, I'm a lender and I do a VA home loan, I got a 98% chance this person's going to pay. Number two, if they don't, I got a guarantee if they default, they're going to clear the loan off my line and I'm going to get reimbursed from my REO costs from the VA home loan guarantee from the entitlement package. And number three, we are going to look like heroes for putting veterans in home loans. Guys, no lender in the country wants to be the one that says, hey, we denied a veteran from getting a home loan. So this kind of brings me to overlays. Now, remember when I talked to you about in the second tier back up here in box number 2, if you're Fannie or Freddie, what kind of a payout do you give if the borrower defaults? None. This is why conventional loans have an exorbitant amount of overlays. It's not so easy to do conventional anymore, is it, guys? Think about this. For a conventional loan, you better be freaking bulletproof. If there's a piece of lint on that sucker, pow, they are kicking it right out of the portfolio. Now, FHA doesn't have as many overlays, but they still have a portion that are there. VA is the one out there that has the least amount of overlays attached to it from a lender. The two you're typically going to come in contact with, number one is FICO score. The VA says you do not need a FICO score. However, every lender disagrees. The lowest we hear out there right about now is what, Fish, 580?
5.8. I mean, you hear folks that can go lower with a large down payment, but the lowest that you're going to have a good chance of doing anywhere close to zero down, 580. Yeah.
Sounds good. And the other one is going to be, and you don't really see this one too much anymore, Fish, is seasoning time on short sale and foreclosure. So for foreclosure, the VA only needs 2 years from the sheriff sale. Now, if you're in a state like Michigan where they have a 6 months right of redemption, that is a huge advantage because you get to start your time in seasoning from foreclosure 6 months prior to what conventional and FHA do. They have to wait till after the redemption is done, not from the sheriff's sale. So that's a big deal if you have a state that has right of redemption. Now, conventional, we all know, how long is it, Fish, for foreclosure?
Forever.
For 7 years, right? We're going to get 3 years for FHA, and again, VA is only 2. So that myth is busted that VA home loans are harder to do. They're actually the easiest loans to do out there now. Now let's look at number 3. VA loans take longer to close. This is just an absolute false statement. When you're looking at all the loans that closed in fiscal year 2017, because of the fact that 99% of all VA lenders that do VA loans have what's called automatic underwriting authority. It means you whip it through DU. You get a DU approval, the sucker's pretty much done. The average turn time from application to close in 2017, Fish, how many days?
26 days.
Outstanding job, young man. 26 days. And I believe that is a acceptable time for any real estate agent. If it's not, fire them. I was about to drop an F-bomb, but I'm on camera. Okay. So number 4, let's move on. The seller has to pay for the veteran's fees. This is one of the most common ones that we hear because this has really plagued the VA loan throughout time. So let's really explain that. In the VA 26-7, there's a section that has unallowable and allowable fees. The following fees are not allowed: lender appraisal, lender inspection, settlement fee, escrow fee, closing, doc prep, underwriting, processing, application, pest inspection, attorney, assignment, copy, email. All of these fees are unallowed to the veteran, and the veteran cannot pay them only if you look in the top right-hand corner, there is a 1% origination fee being charged by the lender. Now, historically, guys, what do lenders charge a borrower? Well, as long as I've been in the business, almost 18 years, for the first 13 or 14, everybody charged 1 point origination, right, Fish?
Back when people were buying $40,000, $30,000 houses.
All right, yeah. Tell that to the people in California that are paying 1 and 1. All right,
yeah.
So out of 800,000. My point is nowadays most people and most lenders, I should say, don't charge the veteran an origination fee. And if there's no origination fee, then they can pay up to 1% of every single one of these fees, including the termite inspection. So let's say if you have a 0.5 point fee, that means the other 0.5 point can be paid by the borrower. It just has to be a cumulative amount of 1%. So as long as that is not there, then the borrower can pay their own fees. Now, why would we want the borrower to pay a termite and a closing fee? Because the last thing you want to do, like I said, and you're a multiple offer situation up against 2 other 20% down conventional offers, is have your offer kicked out because you want the seller to pick up a $95 termite. It makes no sense. Pay your own fees. And veterans, I'm a Marine Corps vet, and we say this a lot to other people. Hey, treat me like everyone else. Fine, pay your closing costs like everyone else. They have no problem doing it. It makes them feel good about themselves. They've worked hard. They got no problem paying hard. And again, they make $20,000 more than most civilians. So don't worry about it. They got the money. Okay. So this myth is actually busted as well. The seller has to pay for the fees. Now, how about you could only have one VA home loan at a time? This really gets into the backbone of the VA home loan, Fish, right? Is entitlement. So this is the hardest part for most loan officers to remember. So I really kind of brought this down to as simple of a process for fourth grade math as I could possibly get it. It's still kind of getting every aspect covered at the same time. So you'll hear like, well, you'll hear Vietnam vets say, well, I know I can only use I used it once, I can never use it again. That's false. And we're going to show you why in just a second. Well, if I got one, I can't have another one. If I foreclose on one, I can't have another one. Well, let's take a look. First of all, you got to understand entitlement is 25% of the max loan guarantee. Notice I say max loan guarantee, not max loan amount. And I'll tell you why in just a second. Now, first of all, here's the 3 most common myths that surround the VA home loan when you're talking about the calculation of entitlement. Number 1, you can only have one VA home loan at a time. Number 2, if you foreclose on a VA home loan, you can never have another one. And number 3, that the VA actually has a max loan amount. Because Fish, do they have a max loan amount?
They have a max loan amount that they will guarantee.
But no max loan amount.
Loan amount.
All right, so let's jump into there. Where do these myths come from? Well, let's look at myth 1 and 2. Number 1, you can only have one VA home loan at a time. Well, this is, you got to understand where these come from is because every veteran has 2 sets of entitlement. The first set of entitlement is called basic entitlement, and that is if your loan amount is from 0 to 144,000. Bonus entitlement is 144,01 up to the county max of 424,100, and that is about to raise Fish January 1 because the Freddie Mac.
That's correct.
And it's going to go up about $30,000 to 453,100. Correct?
Correct.
If I'm not mistaken. Now, let's go back to the myth. You can only have one loan at a time. Do you want to know why? Because prior to the mid-1980s, there was no bonus entitlement. It was just basic entitlement. So if you had one loan at that time, and this would be your Vietnam era guys, right? World War II or Korea guys that are using their VA home loan. They're the ones that are saying, I can only have it one at a time, okay? And it was true. If you had a VA home loan at that time, you couldn't have another one. Or if you foreclosed on one, myth number 2, that you couldn't get another one until you paid back the VA $36,000, which I'm sure you can imagine didn't happen very often. Then along comes the mid-1980s. The VA decides, hey, we have 2 reasons why we want to have bonus entitlement come out. Number 1, we don't want to restrict someone that used their VA benefit to purchase a primary residence. And now their family has grown. You know, they went from a 2-3 bedroom house and now they got 6 kids, and they want to go and they want to sell this house, or they want to keep that house in his investment, or they paid it off free and clear and they want to keep it just as a second home. Back then you were forced to just, oh, well, go conventional or go FHA. And the VA said, that's not right. We want to give our veterans a chance to use the benefit again. Or maybe they made a mistake. Maybe they foreclosed. But what we need to do is give them bonus entitlement. So can you have if you have a loan out in basic from 0 to 144,000, Fish, can you have a second VA home loan?
You absolutely can have a second.
And what do you have to do? How much, what does the loan amount have to be?
Well, you're going to have to be over the basic loan amount. You have to be over your basic entitlement 144.
Absolutely. So you foreclose on a small one, go get a bigger one. I'm not saying it's right. That's just the way it is. That was a little joke. Don't think we should advertise that very well. So moving right along, the best way to teach you guys entitlement calculation is to teach it like a checking account. So we know that the max county loan, the loan guarantee for most counties, 95% of the counties in the country right now stands at 424,100. So we're going to use that as our basis today. Well, 25% of that is 106,025. So in your beginning balance in your checking account class, this is your beginning balance, what we have. Now, let's say you went and got a loan for $144,000 in North Carolina. You're a young Marine and purchased your first home. You did 4 years there. This house is 1 mile outside of base. And now your 4 years is up and you want to come back home here to Michigan, and you have a choice to make. I can either A, sell this house, pay it off, which means I would go all the way back to 106,025 because once I had a loan at 144, guess what I had to make? A $36,000 withdrawal, right? Or B, I can choose to keep this home as an investment property. Let's face it, it's a mile outside of base, right, Fish? Somebody's going to rent that. So I decide I want to keep it. Well, how much do I have left in my entitlement?
Looks like right here, you got 70,025.
That is correct.
Correct.
So what we're going to do, my friend, is we're going to teach these guys how to find your max loan guarantee with 2 loans. So the formula is real simple. If you look to the right side of the PowerPoint slide here, you take your remaining entitlement and always multiply that times 4. In this scenario, we have 280,100. That's our max loan guarantee, 0 down. Notice I say 0 down. So I can have one loan in North Carolina for $144,000, and I can come back here to Michigan and buy a second VA home loan. Again, always has to be a primary residence. You have to purchase it as a primary residence. You can refinance it as a previously owner occupied, but that's a whole different class. So let's do a word problem class. Let's get in here real quick. First of all, this particular new mortgage scenario, we're going to use a loan amount of $130,000. 25% of that is going to be $32,500. Now we know that our max basic entitlement is $36,000. So once I subtract $32,500, how much does that leave me, Fish?
$3,500.
Absolutely.
Thank you for pointing that out with your finger.
Not a problem. So now, don't we work well, Amos and Andy? We're going good. So I do have money left in my basic entitlement still. I have $3,500 left. I haven't touched my bonus of $70,025. So I'm going to add the two together, and I have $73,525. Again, my formula is remaining entitlement. And again, in this scenario, $73,525 times 4, we come up with $294,100. But Fish, what if my purchase price happens to be $394,100? And the VA is only going to guarantee up to $294,100. Zero down. What do I do?
Well, I mean, I've heard lenders say that you're stuck. There's nothing you can do, Jay. You got to buy a cheaper house.
Or bring $100,000 to close.
Yeah, I've heard that too.
Yep, because on conventional and FHA, that's how much money you would bring to close.
Just to be clear, that's not correct at all, and not even close.
Right. So here is how we work it on a VA home loan. Here's the difference. If you are short in the difference between your purchase price and your max loan amount on any other loan product, in this scenario is $100,000, that's how much money you have to stroke a check to close. The VA says the borrower only has to pay 25% of the difference. The other 75% gets rolled into the loan. So again, your max loan amount is never really your max loan amount. It's an oxymoron, kind of like military intelligence, right? So in our scenario here today, our veteran's responsibility when the purchase price is $394,100, the max loan is $294,100. So we have a difference of $100,000. The veteran only has to pay 25% of that difference. So their responsibility is only $25,000. And all funds to close can be
a gift or from the seller.
Right. Gift funds. And the gift can come from anybody, my friends. Anybody wants to help out, they can go ahead and do that. Now, the remaining $75,000 gets rolled into the total loan amount of the $294,100. So that makes your total loan amount $369,100. Now, yes, the veteran has to qualify for that higher loan amount. So if they can't DTI or ratio or you get your approved eligible, then, well, I guess you're just asked out of luck on that one. So, but that is how you're going to do calculation for entitlement. So here's what we're going to do right here is we're going to show you how you can avoid the whole max loan amount. Here's really what you're looking at. You got to understand that a lender can lend whatever they want. It's their money. But if they want the VA to guarantee this loan, you always have to have 25% coverage. So let's look over here. I don't know if you can see my cursor moving around here, guys. I have a loan amount of $1 million. Now, as a lender, I have to have a 25% guarantee, but I know the VA is only going to give me 106,025. 25% of $1 million is 250. So I'm short by 143,975. That's how much the borrower would need to bring to close. Again, can be gift funds. And guess what? We're talking $1 million purchase, right? So when we are doing jumbo, what do we need down? What percentage?
We need
typically 20% down.
Well, some of these guys are going to tell you 5%, but the days of the 0 down and 5% might be eking back a little bit. But to get good terms, you got 20%. Your terms are not going to be very good.
Because let me tell you, the VA interest rate doesn't go up just because it's a high balance. Unlike jumbo, you're talking about a half a point lower in rate.
Now you can't on 10%. You can pull off a conventional, but your rate's not going to be the same.
Gotcha.
Your rate's going to be quarter, 0.5% higher. And when you do the math, you end up saving money to the VA loan almost every time. In fact, I was doing a jumbo scenario just a couple of days ago. The person did not want to pay a funding fee, but they were not eligible to waive it. We just upped the rate a little bit, lender credit it. It was still better than the jumbo rate at 10% down.
I love it.
Yep.
So, but I would say mostly across the board on a jumbo loan, you need 20% down. 20% of $1 million fish is
$200,000.
That's right. Subtract 143,975. I believe we get to keep about $56,000 in our pocket in this scenario. So VA wins again mathematically. Now, just so you guys know, VA in 98% of all scenarios is mathematically superior. The only time that it really isn't is when you get into a high dollar range where you're multi-million dollars and you need such a large down payment, it just doesn't make sense anymore. Or when the veteran is out of entitlement. But other than that, math is math is math. So really quickly, what I want to touch on you is the funding fee. We keep talking about this funding fee. So let's look at this first. So when you're doing a purchase and you're active duty or what we call regular military, then first time use 0 down is 2.15%. Now, notice if you put 5% down, it drops to 1.5 and 1.25. And you saw my slide earlier that 29% of vets actually made a down payment because it lowers the interest rate on the funding fee. Now, one of the most important questions to ask a veteran, there's 3 main questions, right, Fish? Number 1, are you or your spouse or a veteran? Number 2, are you entitled to disability? And number 3, do you have your certificate of eligibility yet? But number 2, are you entitled to disability? Is because we want to know that for this reason right here. If a veteran is entitled to 10% disability from the VA, the funding fee is waived. That puts money right back in their pocket. So let's look at subsequent use. Every VA loan you ever do after your first one, if you go 0 down, you're going to be stung with 3.3%. That is how much the interest rate is on the funding fee. This is the VA's polite little way of incentivizing the veteran. Hey, put some money down. Over here, first-time home buyer, we get it. You were a little bit younger, a little bit less of an economic stability than what you probably are at 50 years old. You've done 4 loans now. Put your big boy pants on, put some money down. Now, when you look at if they put 5% down or 10% down, even if it's first time or subsequent, notice it does not change. So there is an advantage to putting the money down. That's why it's a very important statistic to know that 29% of vets actually made a down payment last year. Now, if you're talking about cash out refis, then the only time that you're ever going to get a 2.15%, I don't know how that just happened. I'm back up. There we go. 2.15% interest rate on the funding fee. The only time that's ever going to happen is if they've never done a VA loan and you're refinancing them out of a conventional, out of a jumbo, out of an FHA into the VA loan. Any other time, you're going to have 3.3%. Interest rate reduction loans, don't even really call it a loan. It's a benefit to the actual veteran over here. But if you're a loan officer out there and you tell people you do a lot of VA home loans and they're all IRRRLs, just stop. Because anybody could do a loan that doesn't have an appraisal, doesn't have a credit report, doesn't have income, doesn't have assets. Right, Fish? Pretty sure anybody could do that.
Well, not everybody has a license, but
yeah.
You have a license.
Right. But that doesn't make you a benefit. That doesn't help you put the veteran first. That doesn't make you servicing the veteran. You want to be a good VA loan officer, learn how to structure the purchases so that you can orchestrate a transition for someone who is PCSing. PCS stands for permanent change of station. When you could have moving trucks on either side of the country and the veteran borrower is not available because they're on a mountainside in Afghanistan and you're using a power of attorney, you have the alive and well statement and the pregnant wife with 2 kids, yeah, get the scenario. So don't beat on your chest that you're doing IRRRLs. Okay, moving right along. That myth is busted that you can only have one VA home loan. And let's get into the last one. And this is where this is what realtors want to know the most. So if you could pick up something today, this is the section you really want to watch. VA appraisals are harder. I beg to differ, right? First of all, VA is the only loan product that has 2 appraisal rebuttal processes. The first one is called Tidewater. The second one was called reconsideration of value. So let's look at Tidewater. In Tidewater, phase 1, what's happening is that the appraiser's gone out to the property and they can't reach the value. So they've searched the MLS and they can't come up with comps to support what the listing price is. Now, ask your listing agents out there how they feel about when an appraiser calls them and says, sorry, I can't hit your purchase price. Most of them will turn red in the face and go, the appraiser's an idiot. Okay. So what I want you to do is kind of change their perception. Don't look at the appraiser like an adversary. Treat them like an ally in this situation, because that's what it is. This is the only time that you as the loan officer and the realtors have a chance to influence the value on an appraisal. Influence value is a no-no term when it comes to conventional and FHA, correct, Fish?
I mean, you can't even dial them. So many of the laws and rules are revolved around them being independent, not even having any input from the other parties. So it's definitely a different process.
Definitely a different process, and it is absolutely encouraged because at this phase of the game, there is no value on the appraisal yet. That's why it's so important to catch it in the Tidewater phase. But here's the key, guys. You only have 48 hours to do that. Once the appraiser initiates the Tidewater alert in the VA system, you only have 48 hours to produce 3 comparables, not 67 listings or pendings, right? 3 comparables. So here's what happens in phase 2. The appraiser has actually done the Tidewater alert and they're waiting for the comps. Now the appraiser is either going to get 3 comps that support the purchase price and your process is over and you get your value. B, you're going to get comps that do not support the purchase price. Here's where the appraiser is asking for apples to apples and you send back a pumpkin, squash, and banana. Or C, you'd get 0 response back from the agents or the lender when you're the appraiser. Either way, after 48 hours, that appraiser has to move forward and put a value on that appraisal. So in phase 3, what happens is now all that has happened. So let's say we're going to go with answer number B. They got comps back. They asked for apples to apples, but they got a pumpkin, squash, and a banana. And we're going to say the listing price was $160. And the appraiser says, sorry, I don't see it. It's $140. Boom. Once there is a value on that appraisal, Tidewater is over with. Okay. But you're not out of the woods just yet. You have one more chance to get this value back. So what's going to happen in phase 3 in Tidewater, the appraiser, it's over with now. So the appraiser is going to issue a value and the appraiser is sending the appraisal over to the lender. Now at the lender, what's going to happen is we're going to start process number 2. This is called reconsideration of value. Phase 1, the lender receives the appraisal back from the appraiser. The staff appraisal reviewer, from now on, we're going to call that a SAR. SAR is the acronym, Staff Appraisal Reviewer. Understand that every SAR is a VA underwriter. Not every VA underwriter is a SAR. And the SAR is equal rank on the collar to the VA appraiser. Now, guys, there's a SAR at the lender that you work for, and there is a SAR at the VA. The SAR at the VA actually has the authority to grant back up to 15% in value in the form of a desk review without even going out to the field. So the SAR enters in the notice of value. That is called the NOV. Very important term. Once the official NOV is entered into the VA system, that is the value that's attached to that appraisal for the next 6 months. It's attached to the property and to the borrower's SOC. So what happens in phase 2 is to complete the reconsideration of value process, the veteran must request in writing, and that can be in the form of an email, that they want the lender to initiate the reconsideration of value, the ROV. Now, understand something, guys. Whether you're in Tidewater or reconsideration of value and you're providing comps, understand these 2 important things. Number 1, your comps must be older than the date of appraisal. So if you did your appraisal on the 1st, what are the comps have to be? The 31st and older, right? Number 2, they have to be closer than the comps the appraiser used. Do you know how many times I have realtors sending in comps? Well, this is a half a mile away. It's within the 1 mile radius that you can use. So what? I got 3 within 2 blocks that support it. Your comps have to be better, at least distance-wise, than what you're talking about on the appraisal. So it's been my experience, guys, and I always say this. If you've watched Boston Legal, I'm like Denny Crane, never lost a case, right? Knock on wood. So I know it's going to bite me one day. I've never lost a reconsideration of value, but I know which ones to pick and choose to fight. And the main reason is because I'm not looking for comps. I can really, really count on my hand in the past 7 years or so where I've seen like a couple of magical comps come flying in to change the game and get value back. Where you're going to win is beating the appraiser with their own bad math, with poor adjustments that they make, and using their math against them on their own comps. How can they argue? It's their own comps, okay? So that's what we're doing in phase 2. We're requesting in writing. We're going to start the reconsideration of value process, and we're going to send what we believe the value is. The SAR at your lender has to actually request a specific dollar amount. So she's going to say, look, I agree with the appraiser. I don't feel this property is worth 160. However, I know my market. I don't feel it's worth 140. And I noticed some mistakes and adjustments that they made. I feel it's 150. So before you send that back over to the VA and request from the SAR for them to increase the value from 140 to 150, you better have this conversation with the seller right here. We're not going to get 160, but if we get 150, do we have a deal? That has to happen first. You can't be like, go to the VA, because the first question the SAR at the VA is going to ask the SAR at the lender, is the seller willing to come down? And the SAR can't go, well, we were just kind of seeing if you're going to give us 15%, then we'll go back to the seller, right? It doesn't really work like that. So do your due diligence, get the commitment from the seller first. In this scenario, we're going to say, yes, the seller says we can come down to 150. Then the SAR at the VA is going to say, hey, that's within our tolerance, 15%. We see the seller is trying to put some skin in the game to help this veteran get into the home. We can make this decision for you. And guys, that is how you win in appraisals. So real quick, I want to show you this. If you have bad horror stories or you hear about bad appraisers, you need to report them to the VA so they can fire them. This is called the appraisal scorecard. Every appraisal now that goes to the VA is through CoreLogic. In November of 2013, that is when the VA made this move. And this is a good thing. This is where all the appraisal data for conventional, FHA, everything is in here, much more than the MLS. Now, if you don't know, Fannie Mae and Freddie Mac had actually approached VA and said, hey, when the mortgage meltdown happened and everybody was upside down, how come your homes weren't upside down? If you look to the right-hand side of this slide, you'll see all these little risk factors. And that's why garbage in, garbage out, just like a DU. See, you got to understand the VA, everyone thought VA was being strict on value. All they were doing was being realistic when the rest of the market was just blowing up a huge bubble that was waiting to be popped. And I see some dangerous signs of that again, don't I, Fish? But anyway, I digress. This is where you want to be. So when you can check on an appraiser, you can call them in and complain about them, and they will get their scorecard ding. And after enough dings, bye-bye, they're gone. And that is an absolute advantage to the veteran because, believe it or not, guys, you know who works at the VA nowadays on the mortgage side? Veterans. And what they care about more than anything is the veteran borrower. They don't care about you. They don't care about me. They don't care about the realtor. They care about that veteran and want to make sure they're not purchasing a home for more than what it's worth. So their biggest pet peeve in the world is anyone or anything that impedes the veteran from purchasing that home. And that means appraisers included, undervaluing the property. So let's make sure if there being a problem, we dig in their scorecard. So that myth is absolutely busted. And we've covered those 6 myths probably in record time. I would say I normally take about an hour to do this.
Yeah, you're talking super fast.
Gotcha. So now we're bringing Fish in to go on to the social media part.
All right. So let's talk a little bit about how folks that are involved with Military Mortgage Boot Camp and some of the loan officers that we really admire all over the country are getting the word out there that it is important not just to be good at VA loans, but it's important to help veterans and find more veterans to help them as loan officers. One thing I always say, and Jay and I have talked about this many times, is that I can be the best at VA loans, but if nobody knows it, if I'm standing in the corner yelling about how good I am, and all my veterans are going to a call center and they're working with somebody that had a license less than a year, that didn't even pay attention to training, and that doesn't get the certificate of eligibility before they start the process, am I really helping the veteran?
Absolutely not.
Absolutely not. So I need to be good at getting the message out there. And one thing that we have focused on in Military Mortgage Boot Camp is having an abundance mentality to operate as a community of loan officers that truly care about putting veterans in the best position. Many of the members that are in our circle that are in Military Mortgage Boot Camp in the community have noticed and have found ways to use Facebook, LinkedIn, YouTube, email distribution lists to ultimately get the message out there to the veteran community that not only do they want to help them with a VA home loan, they want to help them wherever they're at, whether it's helping them find additional discounts in their hometown or helping them deal with some of the issues as they transition back. A couple examples. I encourage anybody who's watching this who hasn't connected with these two fine gentlemen, two of our biggest advocates in Military Mortgage Boot Camp, two good friends of mine, Andrew Paul and Jason Steyer. Andrew Paul is just putting all kinds of great information on his page, very little about mortgages and quite a bit about veterans issues, about guns, about raising strong boys, issues that are important to many veterans. So Andrew has actually gone out of his way to specifically talk less about loans. Let's face it, loans are a little bit boring. Unless you're in the throes of getting a loan and you need to buy a house today, you may not want to hear about a loan. But you may have other issues that somebody who has spent time trying to understand the veteran community can certainly help you with. And that's why I mentioned Andrew today. If you haven't seen his page, Andrew Paul Veteran Advocate, jump over there and follow him. He's doing great things in the veteran community. My good friend Jason Steyer works with Movement Mortgage, has been doing exceptional items and events in his community, and he consistently puts posts on his business page and his personal profile every week where he's just sharing news in the community about either his past clients or information about VA events that are coming up. Occasionally, he drops some tips that are going to help the veterans when they're ready to buy a house. But more importantly, if you watch his news feed, he is generally finding some kind of information that's useful to veterans in the community on a weekly basis. So I encourage you to focus as much as you can on giving back to the community by advocating for veterans beyond just being good in the loan process. Now, some of the folks that work with us and that are in our instructor community, we'll call it, you don't know us, we can certainly talk about what that is some other day. They have actually gone deep into making videos specifically about the VA home loan process. And our instructors and some of the members of Military Mortgage Boot Camp work hard to brand themselves as mortgage loan officer or mortgage professionals who truly understand the VA guidelines. So what these folks are doing is breaking down the VA guidelines in small, digestible segments. They're putting them on their Facebook pages. They're putting them on LinkedIn. They're putting them in YouTube channels. They are positioning themselves as authorities by standing in front of a whiteboard, by getting in front of a class and teaching, and by putting the message out there that the VA home loan is not an inferior product, that it is equal, in many cases better to the conventional home loan, and real estate agents should pay attention to their video series. What if we made 20 videos and we call them Realtor Recon, and we start sending all those videos out to our network on a weekly basis? What if we actually present ourselves as authorities? We have boot camp logos. We're branding ourselves. This is what the folks who are involved in Military Mortgage Boot Camp work together to spread the word, spread the message, and be better at what we do. Not only do they get the message out there, but by stopping what they're doing to make videos, they force themselves to learn what's most important in the VA loan process, what's most important to veterans, and they actually teach themselves how to be better marketers. Believe it or not, a good loan officer is a good marketer. I'm going to show you some of the social examples from folks in our network. Some of you know these gentlemen, Clayton Schmeiser, always out there putting himself in as many positions as possible to help and serve the veterans. In fact, at one point this year, he actually flew to Hawaii
just to sign a document,
just to get a document signed because a builder was trying to pull a home from a veteran. Clayton has run a fantastic Facebook business page where he's constantly advocating and constantly putting himself out there, doing everything he can to advocate and help the veterans. Certainly, he does more than just the closing pictures with a key. We just wanted to do a special shout out to Clayton. Clay Dog. My good friend Alex is always putting posts that get me kind of emotional.
This one gets me fired up.
Oh, man, this one gets me fired up. And I put this one out there today just because I watched him post this, and I watched how he had 55 likes and 7 or 8 comments within minutes. And part of it is because Alex is constantly advocating for the veteran community on social media, whether it's Instagram, LinkedIn. Either way, if you follow Alex and you watch his messages, you'll notice that a lot of what he posts is more about getting folks inspired to help veterans and less about how cool Alex is as a loan officer or how big his truck is. Exactly. He does have a very big truck. I showed a good example from, again, my friend Jason, who is putting it out there on social media, just asking questions. Do I have any realtors that would be interested in attending my Military Mortgage Boot Camp on Veterans Day? What a great question to ask. Please tag a realtor. Last I checked, he booked 5 or 6 different teaching engagements off of that post because he has positioned himself as an authority like many of the folks in the Military Mortgage Boot Camp network. Now, I know some of you watching today, in fact, someone just messaged me a minute ago, gentlemen in California, might know everything there is to know about VA guidelines, but I promise you, when you join a strong network of folks all over the country, what do we say, Jay? Iron sharpens iron.
Iron sharpens iron.
When you surround yourself with the best, when you stand at the front of the class, when you lead by example, when you get great ideas from some of those who are at the top of their game in abundant mentality type of setting, you can only find that you're getting better day by day. So many of our Military Mortgage Boot Camp instructors follow the lead that Jay started our company and our vision with, which is teaching classes. In some cases, they're CE. In some cases, they're lunch and learns. In some cases, they're just shorter 1.5 to 2 hour versions of the VA home loan. But we teach these classes all over the country ourselves and with a network of instructors. We got, about 130 1,520 instructors that are teaching our classes. And
about 25 that are doing nothing.
Yeah, we got some that are doing nothing, but we'll talk about those another day. Now, we also have a great place for folks to hang out. Folks in Military Mortgage Bootcamp really love social media. We love to chat all day, every day in the MMBC alumni group.
But most importantly, what this group really serves as is a help desk and a structure desk for your VA home loan scenarios that are getting kicked back and declined by your underwriters. And right now we're saving about 12 to 15 deals a week that are getting shut down and declined. We're flipping them into clear to closes simply because we're providing the documentation back to you to give to your lender or your underwriter at your lender, and putting the hyperlink right from the VA 26-7. We're not just, hey, we're just coming up with this material. We go right to the Bible, cut and paste and put it. What can they say? Nothing.
Now, some of the folks in our network, they say, Jay, this is great. I already know everything, and I don't need to be, I don't need to pay attention. And we call them one-on-one coaching calls, and we start encouraging them to tune in. Next thing, they're like, oh my God, I'm learning more stuff. This is great. I love the support. I love all you guys. I promise you, even though you may think you know everything, or you may be great at VA home loans, jumping in and learning in small 5 to 10 minute segments as folks post in the MMBC alumni group, as they share some of their marketing tips, as they share local community events, as they share national organizations that they become involved in, as they share very specific, difficult, high-level scenarios that they've been able to battle through, is a fantastic way to learn.
And I always say that this is not like riding a bike. If you're not actively in the VA 26-7 and getting circulars, weekly from the VA, you're not in the here and now. You are not really having the awareness that you think you have just because you do a lot of VA loans and that you get in there with your underwriter. It's different. Basically, you need to think like an underwriter and you will grow. And that's really if we do one thing better than anybody else, we know how to surf through VA red tape.
Absolutely. And, like Jay says, this is surfing through red tape. I always hear these LOs tell me they don't want to hear about the guidelines. They already know it all. They got a support desk. Guess what happens when they get stuck? They come to Jay and I. Oh my gosh, how am I going to deal with this reconsideration of value? I don't know what to do. Well, we're going to talk in just a couple minutes about an event we got upcoming. We're literally teaching people how specifically to put a realtor, or to get information from a realtor, and to put a recon of value together that wins, just like Jay said, Denny Crane, never lost a case. Now, in addition to the alumni group, the folks in our network have access to our digital course, where many fine videos, just like the one we're recording right now, are available for reference. Is many of the materials as we run across and we find that can help you are in either our course or in our alumni group. Ultimately, when you join MMBC as a graduate, you're going to get high-level assistance. You get surrounded with loan officers that have abundant mentality to serve the veteran. And guess what, Jay? If we have somebody in our network that doesn't have that abundant mentality, do they stay in our network very long?
Nope.
Nope, we boot them out. Somebody comes to us and says, I'm one of the only MMBC person in the whole entire state of North Dakota.
Well, we're not a good fit for you.
We're not a good fit for you.
Because there's no way one person can serve every veteran.
There is no way you can take care of all the veterans all by yourself. So an abundant mentality to serve the veteran first. Everything else will fall in line. We've got over 300, actually getting very close to 400 members that have gone through our classes, our training, and our coaching support mentorship. As we mentioned, daily support scenario, problem solvings, marketing, training, presentation documents, file sharing. Our digital membership certainly has branding, marketing, examples of realtor recons. We talk about how to attract more veterans. Fantastic resource for brand new LOs and for the most seasoned veteran loan officers. I have loan officers in my program that are closing 300 units a year that are still loving everything we do, and they come to us when they get stuck, when they need to be inspired, either when it comes to marketing or when it comes to trying to solve scenarios with their underwriting team and or with the regional loan centers. Many of our graduates go through a class, go through a digital course, or essentially reach out to us, perhaps skip the line and graduate to what we call an instructor. So the future with MMBC, opportunity to learn and grow. Our best graduates end up teaching classes. Some of them teach classes for CE. Some of them teach lunch and learns. Ongoing support from the network. They're branding and presenting themselves as authorities all over the country. If you're at the VA Regional Loan Conference this last year, you probably saw a dozen of us. wearing our MMBC shirts.
This year, you'll see 50 of us.
Well, we're hoping to get to 50 this year. We'll see how
It'll
it goes.
be in South Beach, Miami.
Exactly.
There'll be 50 plus. Don't worry.
So if you'd like more information about joining our network, you can find Jay McMakin or Michael Fisher on Facebook, is where we spend a lot of our time.
Or Military Mortgage Boot Camp.
Or Military Mortgage Boot Camp, our Facebook page. Not hard to find. Go ahead and message us on the messenger. Now, for the Mortgage Loan Officer Network, the folks that are watching live in the network, I'm going to put a link below this streaming. I was trying to stream Facebook Live, I got to be honest with you, but I'm going to have to buy some special software because this live streaming with presentations and multiple people has been a little tricky. But I'm going to put a link to our upcoming event in Metro Detroit. We're calling it the MMBC
Winter Blues.
Winter Blues. And we're going to be networking with instructors and folks that have done a lot for Military Mortgage Boot Camp. We're going to be sharing our best practices. I believe we're going to be spending some time specifically, like I mentioned, working on reconsiderations of value.
We are going to have an actual SAR, Lanny O'Hara, come in to teach the section on reconsideration of value viewed from a SAR.
Awesome. So we got one-day special on joining Military Mortgage Boot Camp. We got an
and what day is that today?
That's
today.
That's today.
The one-day special.
The one-day special. So if you'd like to join Military Mortgage Boot Camp, normally joining Military Mortgage Boot Camp, becoming part of the network, getting digital, getting access to the support group, getting your shirt, all that kind of stuff. Normally that is $299. It's been $299 for a long time. It's Christmas.
It is.
It's Christmas.
And we're in the spirit of giving.
We're in the spirit of giving. So we want to give you what are we going to give them? Are we going to give them till the end of the day?
We'll give them till midnight.
Give them till midnight?
Right.
All right.
Santa flies till midnight, right?
So we have never...
Actually, we'll give them till 9 a.m. tomorrow morning.
Till 9 a.m. tomorrow morning? All right. So till 9 a.m. tomorrow morning, then I'm going to kill this link. Up till 9 a.m. tomorrow morning, digital is half price. That's the lowest we've ever allowed anybody to do it. I did.
And for those mathematicians out there, that's $149.
Yeah. Now I was
$149.
I was completely against that, for the record. But either way, we appreciate your support in Mortgage Loan Officer Network.
I'm Santa. He's the stingy head of the elves.
I'm the Grinch. For the record, the Grinch did not hate Christmas. He hated people.
That's right. That's true.
So if you want,
sure he said he hated Christmas. Yeah, so that's okay.
If you want any more information, like I said, feel free to hit us up on Messenger. Email us, militarymortgagebootcamp@gmail.com. Dial one of us. Text us. Whatever you need to do. We appreciate you spending the time to learn how to be a better advocate for the veterans in your community.
And putting veterans first.
And putting veterans first. So I think that's all we got. I gotta
stop sharing first.
Okay. Stop sharing screen. Stop. End of slideshow. I always script
all right.
these videos.
We're back.
We're back. So again, we appreciate you tuning in. Thank you for hanging out with us for the last hour. And if you're watching this on the replay, and it's like December 7th or December 31st. Today's the 20th.
Yeah.
So no more special on the link. That's all. That's like a one-time.
9 a.m. on the 22nd of December.
No, tomorrow's the 21st.
21st.
Yeah.
My bad.
9 a.m. tomorrow. I'll kill that link. But I'll put a link to our event if you want to hear more about the event. If you want to ask me any questions, hit me up on Messenger. Either way, the event, the digital, and we're here to support the MLO network. If you ever run into a VA question, feel free to drop it in the group. We'll do what we can to support you, help you, and ultimately serve the veteran.
I like it.
Cool.
Well, one last thing. Number one, Merry Christmas. Have a Happy New Year. And we are out.
Boot camp style. Crap, where's the stop button?